Welcome back to Investing Talk Podcast.
Today, we are effectively dissecting the nervous system of the modern AI economy. We're not just looking at a software ticker.
No, not at all.
We're looking at a company that is fundamentally changing how the global economy makes decisions. We're looking at Palantir.
And the core idea here, the big so what, is that Palantir has moved way beyond being just a niche government contractor.
Exactly. It's becoming the default operating system for the entire AI revolution.
As usual, before we start, subscribe, like, and comment to this video to support the show. We really do appreciate the engagement. It helps us keep digging into these numbers.
And the numbers we have to dig into today are, well, they're kind of behaving in ways that defy the standard physics for a company this big.
I want to get right into that. I was looking at the setup for this, and usually when a company gets this large, things slow down. You know the drill.
Right. Startups grow fast, big companies grow slow.
But here, we're seeing raw data that looks like a startup, not a mature, large-cap company. I mean, we are talking about massive acceleration.
It's a complete divergence from the norm. Specifically, we're looking at 70% revenue growth in the fourth quarter of 2025.
70%.
70. But the real story isn't just that top-line number. It's where that growth is coming from. The demand from the U.S. commercial sector is accelerating so fast, it suggests a paradigm shift.
A shift in what way?
In how businesses are actually using AI. They're not just, chatting with it anymore. They're running their entire businesses on it.
Okay, so let's contextualize that 70% figure. That was for Q4 2025, and it brought total revenue for the quarter to, what, $1.41 billion?
Correct. And context is everything here. That 70% year-over-year jump, it's the fastest growth rate in the company's history since they went public.
See, that's what I find difficult to square. In finance, there's the law of large numbers. It's just harder to double $1 billion than $1 million.
Gravity usually kicks in.
Right. Growth rates decay. But Palantir seems to be, inverting that law.
It's an acceleration trend, which is just exceedingly rare at this scale. If you zoom out to the full fiscal year 2025, revenue hit $3.9 billion. That's a 53% growth rate.
But Q4 came in at 70. So they're exiting the year with way more velocity than they entered it.
Precisely.
I actually checked the historicals on this just to see if it was a one-off, a big government deal hitting the books all at once. But it's not.
It's a pattern.
This is 10 consecutive quarters of accelerating revenue growth. 10. That suggests compounding demand, not a lucky quarter. The trend line is pointing almost vertically.
And we have to dissect where that capital is flowing from. Because for years, the bear case on Palantir was really simple and honestly pretty persuasive at the time.
Oh yeah, the Uncle Sam is the only customer narrative. Everyone thought it was just spy tech, a glorified consultancy for the Pentagon that couldn't scale commercially.
Exactly. That was the knock. Great for hunting terrorists, bad for selling widgets. But look at the segment breakdown now. U.S. commercial revenue is up a staggering 137% year over year.
137%. In the private sector.
I mean, that's triple-digit growth.
It just absolutely destroys that old consultancy narrative.
You can't get 137% growth by throwing more consultants at a problem. That model just doesn't scale. You can't hire smart people fast enough.
No.
You only get that kind of leverage by selling a software product that the market is desperately trying to get its hands on. We're not just talking defense. We're talking logistics, healthcare, manufacturing, energy.
Which brings us to the expectations gap. I love looking at what the so-called smart money predicted versus what actually happened.
It tells you how misunderstood a stock is.
Yeah.
And this is where it gets pretty entertaining. Management issued their guidance for fiscal year 2026. They're projecting 61% growth, targeting between $5.5 and $6 billion.
And just to frame that for you listening, Wall Street consensus, the average of all the institutional analysts, they were modeling for 43% growth.
They beat the street's expectations by almost 20 percentage points. That is a massive disconnect.
So the analysts are modeling a straight line, while Palantir is actually on an exponential curve.
That's a great way to put it. It's the difference between arithmetic and geometric progression.
Okay, but I have to play the skeptic here. Growth at all costs is a dangerous game. We saw it in the dot-com bust. We saw it in 2022. Is this growth costing them a fortune? Are they just burning cash to buy revenue?
That is usually the trade-off, isn't it? But Palantir is arguably a cash machine right now. Their operating margins hit an industry-leading 57% in Q4.
57% operating margin while growing at 70%. Usually you have to pick one, high growth or high margins. Palantir is doing both.
It's what we call operational leverage. because they spent 2 decades building the platform. All that heavy R&D is done. Now every new dollar of revenue comes with very little marginal cost.
And I saw that reflected on the balance sheet. Massive cash position, almost no debt.
Which is so critical right now. It means they control their own destiny. They can reinvest in their AI platform, AIP, using their own cash flow.
We should probably explain the rule of 40 really quick for listeners. It's a classic SaaS metric.
Right. You add your growth rate to your profit margin. If it's over 40, you're considered elite.
So let's do the math on Palantir. They're growing at, what, roughly 60%?
With 57% margins.
Their score is over 100. It's absurd efficiency. It's a statistical anomaly.
And that's bleeding down to the bottom line, too. EPS grew between 59 and 64%.
But what about the customers? Are they sticking around? Is there a lot of churn?
Stickiness is the holy grail. The net retention rate, NRR, is 134%.
Okay, translate that for the non-SaaS people.
It means for every dollar a customer spent last year, they're spending $1.34 this year. They aren't just renewing, they are expanding their usage a lot. And that metric is up 27 points in just 2 years.
And the big fish are getting bigger. The top 20 customers now average $94 million in revenue over the last year.
Think about that. You don't pay a vendor $94 million a year for a tool. At that price point, Palantir isn't a vendor. They're the backbone of your company.
So what's the moat? Why are they winning when every company on Earth now claims to have an AI solution?
It comes down to AIP, the artificial intelligence platform, and specifically this concept of ontology. This is the key. Most companies have messy data. It's a fragmented mess. You can't just slap a chatbot on top of that and expect it to work.
So Palantir cleans the plumbing first.
They create a digital twin of the organization. They map out the entire logic of the business. So when you ask AIP a question, it understands the context. It's production scale AI. It's the difference between asking an AI to write a poem about logistics versus asking it to reroute a global supply chain in real time.
Right. And that creates incredibly high switching costs. Once your entire business logic is in their OS, ripping it out would be like a brain transplant.
Exactly. It creates a network effect inside the company. And that protects them from competitors. Palantir isn't selling a feature. They're selling the entire infrastructure.
We also have to mention their sales strategy, the boot camp thing. It seems to be the accelerant for that 137% growth.
Oh, it's brilliant. The old way of selling enterprise software took months. Presentations, dinners, pilot programs.
Slow and painful.
Palantir flipped it. They say, give us your data for a few days. We'll hold a boot camp and build you a working prototype on your actual data.
They prove the value before they ask for the check.
And it compresses the sales cycle from months to days. That's why you see that explosion in customer count.
Okay, so the fundamentals are, they're rock solid. But a great company isn't always a great stock at any price. We have to look at the chart.
Right, let's pivot to the technicals. As of now, Palantir is trading around $135.68.
And if you've been watching, you know it's been a roller coaster. The stock's down about 20% year to date after some massive gains.
So the big question for every investor is, why the drop?
Is this a falling knife? When a stock drops 20%, you have to wonder if something is fundamentally broken.
In this case, I'd argue no. Absolutely not. The slide is tied to broader tech weakness and sector rotation. It's macro, not micro.
So the company fundamentals are actually better than ever?
Arguably, yes. And we saw a rally start to form right after the Q4 earnings, which suggests the momentum is coming back.
So you see this as a divergence. The price went down, but the intrinsic value went up.
I see it as a discount on a premium asset. And I'm not the only one. If you look at analyst forecasts, the price targets range from around $188 up to $255.
Okay, so from the current price of roughly $11.35, that implies a potential upside of, 38 to 87%? That's a pretty big move.
The technical setup suggests the stock is coiling for its next leg up. It ran too hot, it needed to cool off, and now it looks ready to go again.
And what's the volume telling us? Are institutions buying in?
The volume is incredibly high. It's consistently one of the S&P 500's most active stocks. But the metric that really stands out is the record TCV total contract value.
Right. That came in at $4.3 billion for Q4.
$4.3 billion in signed contracts in a single quarter. That's future revenue already locked in.
That gives you visibility. It's not just hope. It's signed on the dotted line. And looking at the options flow, it seems like the big funds are betting on a recovery.
Bullish institutional positioning, yeah. They're positioning for a rally, not hedging for a crash.
So fundamentals are strong. Technicals suggest a buy zone. Let's check the pulse of the market. What's the overall sentiment?
Overwhelmingly, the mood is bullish. You look at the headlines. Wall Street can't stop buying, turning government contracts into a cash machine. The whole narrative has shifted.
It really has. 2 years ago, it was all black box, unprofitable, controversial.
And now it's AI leader, cash machine, must own. The market loves a winner. And we saw that specific action from Daiwa recently.
Oh, right, the upgrade.
Yeah, they upgraded right after earnings. They basically said to ignore the 20% price dip and focus on the AI growth and the huge contract wins.
And what about the rumor mill? What's the latest speculation?
There's some unconfirmed chatter about AIP upgrades for the IoT and edge markets.
That would be huge. Processing AI on the edge, like on drones or factory robots, without sending data to the cloud.
Exactly. If they capture the edge, they capture the physical world. There are also rumors about a major European expansion, which could push that net retention rate even higher.
And what about catalysts? What should we be watching for over the next 3 months?
First up, earnings. Q1 2026 results should be late April or early May.
And the bar is set high now? They guided for 61% growth for the year. A miss there will be punished, for sure.
Then you have the events, the AIP boot camps, and with the current geopolitical climate, defense budgets are ramping up, which could mean more big contract announcements.
And on the macro side, we have to watch the Fed. Any shift in rates could trigger a rotation back into high-growth tech, and Palantir is right in that sweet spot.
I know you. We can't get away without looking at the dark side.
You know, I have to do it. We have to look at the risks. The elephant in the room is valuation.
Always with the valuation.
Because it matters. A great company is a terrible investment if you overpay. Palantir is trading at a forward price to sales of 67.5.
67.5 times sales.
That is a nosebleed valuation. It is priced for absolute perfection. Any slip-up, any missed quarter can cause the stock to plummet.
That's a fair concern. It's undeniably expensive. If you're a value investor, this isn't for you.
And there's the volatility. It dropped 20% after beating earnings. That tells you the market is jittery. You need a strong stomach for this one.
I agree on the volatility, but I have a rebuttal for the valuation premium.
Let's hear it.
You pay for quality, and you pay for scarcity. You can't compare Palantir, growing at 61% with 57% margins, to a legacy company growing at 15%.
There are no real peers.
Exactly. It's an N of one company.
Yeah.
You pay the premium to own the category leader. And that 20% drop, analysts see it as a dip buying opportunity, not a structural failure.
Fair enough. If the growth holds, the multiple eventually compresses. But you have to believe the growth will last. Which brings us to the final decision.
Time for the verdict. Based on all the data, what's the score?
Drumroll.
The bullish score is a solid 9 out of 10.
A 9. That's high confidence. So let's summarize the whole thesis.
Okay, here's the elevator pitch. Palantir is compounding revenue at 70% with 57% operating margins. They aren't just beating expectations, they are absolutely crushing them.
It's just flawless execution.
And the opportunity now is this price dislocation. The 20% dip to around $135 offers a potential upside of 40 to, almost 90% based on analyst targets.
And the moat is real. This is an AI operating system that is becoming the standard for government and the biggest companies in the world.
So the verdict is a multi-year hold. The path toward $10 billion in revenue seems pretty clear. If you can handle the volatility, the trajectory is up and to the right.
A 9 out of 10. It's hard to argue with those numbers, even at that price. It really feels like they're capturing the entire AI value chain.
It's a fascinating time. It feels like we're watching a future titan being built in real time.
It certainly does. Well, that wraps up our look at Palantir, a company that really does seem to be rewriting the rulebook.
Absolutely.
Before you go, make sure you subscribe, like, and comment on this video. Let us know, do you think Palantir is worth that premium? Are you buying this dip, or is 67 times sales just too rich for your blood? We want to hear from you.
Thanks for listening, and we'll catch you on the next one.